Good afternoon. How are you? Hope you are fine. Hope you had a good time. So, let us start. Question number 19. Let us start question number 19. Question number 19 in your notes. On 1/4/12, Mr. Krishna purchased 1000 equity share of rupees 100 each. 1000 share of 100 rupees each. 100 is face value in AS Foundation Limited at rupees 120 each. This is the price, purchase price from a broker who charged 2% brokerage. So you'll have to find out the total cost of purchasing the investment. So 1000 into 120. How much is 1000 into 120? 1000 into 120, 1,20,000. And then you have to also add brokerage at the rate of 2%. So that is 2,400. And one more cost you have to incur. He incurred 50 paise per rupees 100 as cost of share transfer stamp. He incurred 50 paise per rupees 100 as cost of share transfer stamp. So please tell me, what is the share transfer stamp cost incurred? What is the share transfer stamp cost incurred? What is the share transfer staff cost incurred? So please reply. Anybody who wants to answer share transfer stamp cost? Share transfer stamp cost. One student is saying 1,20,000. 1,20,000 is not right. 1,20,000 is not right. Share transfer stamp cost I am asking you. And you are saying 1,22,400. Oh my God. Oh my God. How can you make such error? Share transfer stamp cost will be 1,20,000 into 50 paise in a rupee means 0.5%. 0.5%. So that is 600 rupees. And this total comes to 1,23,000. So I will have to prepare one working note which will tell me the total cost of purchasing the stock. The total cost of purchasing the stock will be 1,23,000. This is my explanation of this much point. So first you will have to calculate the cost of buying the shares, 1,23,000. Then on 31st January 2013, bonus was declared in the ratio of 1:2. Bonus share in the ratio of 1:2 means 500 bonus shares will be received. And all of you know cost of bonus share is 0. Before and after the record date of bonus share, before and after the record date of bonus share, the shares were quoted at 175 and 90 per share respectively, which means after the bonus shares were issued, the share price has crashed. Share price have become 90 rupees. So the market price of the share is 90 rupees after the bonus issue. Okay. So for further discussion, 90 is relevant. On 31st March 13, Mr. Krishna sold bonus share to a broker who charged 2% brokerage. So what is the sale value? Mr. Krishna sold bonus share. Bonus share means how many shares? It means 500 shares because he had received 500 shares. At what price he will sell? Will he sell at 175 or will he sell at 90? So the answer would be 90. You will take the price after bonus issue, but you have to pay 2% brokerage. So the net amount realized will be multiply 500 into 90, 45,000 minus 2%, 44,100. 44,100. 44,100 would be the net selling price. Next line, show the investment account in the books of Krishna who held the share as current asset, and closing investment shall be made at cost or market value, whichever is lower. In bracket they have written apply weighted average method for calculating the profit or loss and for calculating the closing stock. For calculating profit and loss and for calculating the closing stock, you will take weighted average cost method. Cost, and for closing stock you will take cost or market value, whichever is lower. Cost or market value, whichever is lower. So that would be your closing stock valuation. So are you ready for this wonderful question? Please tell me, are you ready for this wonderful question? This is an exam question. Write down here. Very important. Exam question. This is an exam question. Very important. It comes for 4 to 6 marks normally, but sometimes 6 marks, 8 marks also. So we are ready. Dear student, please draw the format. Please draw this format. Books of Mr. Krishna. Today you will solve all remaining questions. Okay? Books of Mr. Today you will solve all remaining questions as homework. Investment account for the period from 1/4/2012 to 31st March 2013. The security is equity shares in AS Foundation Limited. Equity shares in AS Foundation Limited, face value is rupees 100 each. Face value is rupees 100 each. So draw this format. We are solving a question which has been asked in the exam many times, and it can be asked in your exam also. Once the format is ready, you will kindly inform me. Once your format is ready, inform me. Is the format ready? Is the format ready? Ready. So let us write down Next, some working note we'll prepare. Some simple basic working notes we will prepare. So step number 1, write down. Step 1, cost of purchase. Everybody follow me. We have already discussed cost, but we have to write nicely. Yes or no? Yes. A. So first you write down purchase price 1000 shares into 120 is 1,20,000. Point B, write down brokerage at the rate of 2%, 2400. Point number C, write down share transfer stamp cost. It is 50 paise, it is given 50 paise per 100 rupees. So that is 0.5%, 0.5% into 1,20,000. That is 600 rupees. So this is the total cost. Point number D, total. Presentation is equally important. If you want to get full marks for such question, then you have to write full. If you want half, then write half. Choice is yours. Choice is yours. Step 2, write down number of bonus shares received. Number of bonus share received. Right hand side numbers. First point A, number of shares held before bonus issue. Number of shares held before bonus issue. Number of share held before bonus issue is 1000. And what is the bonus share ratio? What is the bonus share ratio? 1:2. So point number C, number of bonus shares 1/2 into 1000 is 500. Number of bonus share will be 500. Is it right? Write properly. Then step number 3, average cost per share. Average cost per share. Average cost per share. First we'll write down cost of 1000 shares purchased on 1st April 2012, and that is 1,23,000. Kirti is right. 1:2. Then you write down add bonus shares 500 shares, but the cost is nil. But the cost is nil. So my total cost is 1,23,000. And point D, number of shares, 1000 shares into, sorry, plus 1000 plus 1000 plus 500, 1500. Number of shares will be 1500. 1000 original, 500 bonus. So you will answer now. I'm waiting for your answer. What is average cost per share? Average cost per share, C divided by D. Anybody, average cost per share. How much is average cost per share? This comes to 82 rupees. Average cost per share comes to 82 rupees. Is this right? Is this right? Average cost per share 82 rupees. Say yes. Kunal is right. Step number 4. Net sale proceeds. Net sale proceed. Point number A, write down. First, you write down gross sales value. 500 shares sold at rupees 90. Sold at rupees 90. Why 90? Why 90? Because we'll take the market price after bonus issue. Shares were sold after the bonus issue. So this comes to 45,000 less brokerage. But at the time of sale also you have to pay brokerage at the rate of 2%. So brokerage at the rate of 2% is 900. Brokerage at the rate of 2% is 900. So net sale proceeds A minus B 44,100. 44,100 is right. 44,100. Any query till now? Yes, Sonal, any query? Sonam, Moonrise Chaurasia, Falak Mehta, Kirti, Kunal, Sakshi, Jai Shri. Any query? No query. So write down one last working note. Step number 5. Value of closing investment. Value of closing investment. Step 5. Right hand side rupees. First write down A. Number of shares held on 31st March 2013. So you have 1000 share purchased, 500 share received in the form of bonus share, and 500 shares sold, plus 500 for bonus share minus 500 for shares sold. So you are actually holding 1000 share. Point B. Average cost. Average cost per share. We'll go to step number 4 and you have calculated 82 rupees. Step 3, sorry. Step 3. 82 rupees you have calculated. Point number C. Therefore, cost of closing investment. Cost of closing investment is 82,000. Point D. Market value. Market value will be 1000 share into 90 rupees. Market value is 90. So it is 90,000. So point number E. Therefore, investment will be valued at lower of the two. So the answer will be 82,000. 82,000 is the answer for closing investment. Kirti is right. And one last step, number 6, write down. Profit or loss on sale of investment. Last step. Then we'll go to the main answer. Yes, Jayashree is right. Profit or loss on sale of investment. Kunal is right. Rajendra is right. So that is equal to sale value minus cost. Profit is sale value minus cost. Sale value is this value on the screen, step number 4. 44,100. 44,100 bracket step 4. And cost will be 500 shares into average cost 82. We will take average cost. To confuse you, they have written he has sold bonus share. Bonus share sold means 500 shares sold. But for costing purpose, we will take average cost. Anybody wants to give me final verdict? What is the profit on sale? One student is saying 3100. Let me check. 500 into 82 is 41,000. 41. Yes. So 3100. Falak Mehta, 3100 is right. Kunal, Kirti, Govind Thakur, 3100 is right. Sakshi is also right. Okay, so let us go to this main page. It will take now 1 to 2 minutes only. If you give me the answer first, 1412, to bank, purchase, step 1 or working note 1, you will see here on the screen 1,23,000 is the cost. Numbers purchased is 1000. So face value is 1 lakh. And the amount is 1,23,000. So yes is right. Then on 31st January 13, 2 bonus shares, 500 bonus shares were received. Face value will be 50,000, but cost is 0. Cost of bonus share is 0. Then there is a sale of shares. What is the date of sale? 31st March 13. 31st March 13, buy bank, sale. 500 shares are sold. 50,000 is face value. On the screen, working note 4 below, right side. 44,100 is the amount realized. So you will write here working note 4 or step 4. And then on debit side, profit also, you will recognize profit also. To P&L account, profit on sale. You have prepared one working note 6. If you see, I will show you. Working note 6 below, right side, 3100. This 3100 we will recognize. And on credit side, 31st March 13, by balance carried down. So how many units we have now? 1000. And what is the valuation? That is working note 5. Please go to working note 5 and tell me What is the closing stock value on the screen? I'm going to circle that number. 82,000. 82,000 is the value of closing investment. Govind is right, 82,000. Now what I'll do, I'll just check whether my total is tallying. In this question, there is no dividend. There is no right share. Question is easy. A repeated question for 5 marks, 4 marks. Tell me the amount column. 126100. Let us check on the credit side also. 126100 seems to be right. 126100. 126100 is the amount column total. Is it tallying? Yes, this is tallying. This answer is over. We'll do one more practice. Question number 20. Question number 20. The answer is given to you. Just check whether the answer is given to you. If you can see the answer, tell me yes. Is the answer given to you? Question number 20. Everybody check whether the answer is given to you. Yes. So I will discuss with you and then you will do as homework in the notebook. Do you agree? Same to same question. This was asked in another exam. On 1/5/2012, Mishra purchased 800 shares of rupees 10 each in Philco Limited at 50 rupees from a brokerage who charged 5%. So first we'll have to find out the cost of the share. 800 into 50. How much is 800 into 50? 40,000. And then you have to add brokerage also. So please guide me. How much will be brokerage? Brokerage is 5%. 5% of 40,000 will be 2,000. And he also incurred 20 paise per 100 rupees a share transfer stamp. So share transfer stamp is 0.2% into 40,000. So please guide me. 40,000 into 0.2% is 80 rupees. So first working note is cost of investment will be 42,080. You can see in your answer 42,080 is there. This is how you will prepare the working note. On 31st October, bonus share was declared in the ratio of 1:4. So number of bonus share received is 1/4 into 800. That is 200. Bonus share received 200 bonus shares. 200 bonus share. Then they were quoted at 110 and 60 before and after the record date of bonus respectively. So for us 60 is important now. So my third working note, average cost will be 42080 plus bonus share cost 0 divide by quantity 800 plus 200 bonus. So my average cost will be 42080 divided by 1000 is equal to 42.08. So average cost will be 42.08, not 42, 42.08. Is it right? 42.08. Then there is a sale also. Mishra sold bonus share to a broker who charged 5%. So sale value will be, number of bonus share is 200 into market price after bonus issue is 60 minus 5% brokerage. So sale proceed would be try 200 into 60 minus brokerage 5%, that is 11,400. Brokerage deduct 400. So what will be the profit or loss? 11,400 is your sale proceed. Cost will be 200 shares into 42.08 average cost. So please try 200 into 42.08. Compare with 11,400. So you have a profit of 2984. You have a profit of 2984. Yes, 11,400 is like right. And the closing stock will be, you have originally 800 share purchased plus 200 bonus share minus 200 sold. So 800 shares into average cost 42.08. So if you look at the cost of closing investment, it will be 33,664. Is it right? 33,664. And if you look at the market value, it is 800 into 60, that is 48,000. So investment will be valued at lower of the two, that is 33,664. 33,664 is right. So I have given you all the working notes. If you really look at it, there are 6 working notes involved. First working note is this cost. Second working note is bonus share. Third working note is average cost per share. Fourth working note is sale value. Fifth working note is profit or loss on sale. And the sixth working note is closing stock value, closing investment value. And if you look at your answer sheet also, they have also done the same thing. They have prepared investment account and they have prepared all these working notes below. So very important question. Done? Say yes. Now you do the presentation in notebook as homework. So you will do this question as homework. Now we are going to deal with one of the very important questions. Question number 21, which is printed after question number 20. You will find this line there. Question number by mistake is not written, but you can see this sentence there. A Limited has on 1/4/2014 investment in shares of AS Foundation Limited. Can you see this question? After point number 4, Roman 4, where the answer of question 20 ends, A Limited has on 1/4/2014 investment in shares of AS Foundation Limited, a listed company. Wow, AS Foundation is a listed company. As follows. Who is the investor here? A Limited. And what is the name of the company where the investment is made? AS Foundation Limited. This is opening balance. In opening balance, They have 5,000 shares acquired on 1,1069 at rupees 10. The said shares are locked in for 5 years. The said shares are locked in for 5 years. What do you mean by this? On the screen, student will pay attention. This is a new type of problem. And if I give it to you, you will make mistake. Today the date is 1/4/14. The accounting period is 1/4/14 to 31st March 15. These shares were purchased on 10th June 2009. 10th June 2009 means almost 5 years ago. So if you are holding the share for 4 to 5 years, tell me, is it your current investment or is it your long-term investment? If you are holding the investment for 5 years, is it current or long-term investment? You purchased the share on 2009. In 2009, you are holding the share uh, till today, which means it is a long-term investment. Which means it is a long-term investment. What is the meaning of logged in for 5 years? Logged in for 5 years means can't transfer. Can't transfer for 5 years. Can't transfer for 5 years. So most of you are saying long term, you are right. Next line, 10,000 shares were acquired on 1/9/11. Oh my god, 1/9/11 means again some 2-3 years back. So this will be forming part of my opening balance. This will be forming part of my opening balance because this was also purchased on 1/9/11 and today we are standing on 1/4/14. So yes, Mr. Sanket, tell me what is the opening investment value? Question mark. So let me see who will give me the correct answer now. What is the opening investment value? Yes, Chaurasia. Opening investment value. Anybody, opening investment value is how much? Waiting for your answer. Opening investment value is Dhruv Tiwari saying 15,000. That is not right. That is not right. Anybody? Opening investment value will be equal to, since you are not replying, I will only answer. This is opening stock. This is also part of opening stock. So total opening stock is 5,000 into 10 plus 10,000 into 60 plus 10,000 into 60, and now I have started getting the answer. Your balance brought down in amount column will be 6,50,000. Dhruv is right, Kunal right, Tanya is right, Thakur is right, Sanket Sanket is saying 1,50,000 is wrong. Sakshi is right. Kunal is right. Anyway, so this is my opening stock. We'll prepare a working note later. 10,000 shares, 10,000 shares were acquired on 1/9/2014 at rupees 70. 10,000 shares were acquired on 1/9/2014 at rupees 7070. This is current year transaction because this is 1/9/14. Our year begins on 1/4/14. So anything between 1/4/14 to 31st March 15 will be current year transaction. Before that is opening balance. Okay. Next line. On 1/7/14, current year again, 1/7/14 means current year. 5,000 shares are sold. Are sold. 5,000 shares were sold on 1st July 14 out of the shares acquired on 1911 at rupees 60 each. So basically 60 is relevant. 5,000 shares are relevant. On 1/11/14, 10,000 shares acquired on 1914 were dematerialized. Oh my god, this is a new thing. On 1/11/14, 10,000 shares which were acquired on 1914, these shares were dematerialized. Were dematerialized. What is the meaning of dematerialized? Come on, you genius people. What is the meaning of dematerialized? Dematerialized means no answer. You don't know dematerialized? Dematerialized means not relevant. One student is saying dematerialized means not relevant. Oh my god, how can you say that? One student is saying physical form to electronic forms. Yes, this is right answer. Dematerialization means, write down in the notebook. Dematerialization means shares are converted from physical form to electronic form. Shares are converted from physical form to electronic form. Electronic form in shares will remain in your demat ledger, not in the form of certificate. Earlier you used to get a physical certificate where your name was mentioned. It was very difficult to handle physical certificates. So in India now all shares which are traded on the exchange are in demat form so that they can be easily traded on the stock exchange. Second question is, what is the entry for this transaction? If shares are converted from physical form to dematerialized form, will there be any journal entry for that? Will there be any journal entry for that? Will there be any journal entry for that? The answer is no. You are still holding the same number of share. So converting from physical form to general to demat form, no entry is required. Write one more line. No entry is required. No entry is required when shares are dematerialized. No entry is required when shares are dematerialized. So in future when you will read this note, you will understand two things. What is dematerialization and why we have not passed the entry. You have not passed the entry because you are continuing to hold the same shares. Only the form has changed from physical form to demat form. There is no other change. Hence, we are not going to pass entry for this dematerialization. Then why it is given in the problem? This is given in the problem to confuse you. And in case if you are going to get confused, in case if you pass the entry, then you will lose marks. Okay. So let us come to next line. On 1/12/14, remaining shares to the extent possible dematerialized. Again, not relevant. These two highlighted lines are not relevant. This is given to test the understanding of a good student. If you ignore it, good. But if you pass entry for this, you will lose marks. Next point. On 1/1/15, 5,000 shares were sold for 65 each. So there are two sale transactions. There are two sale transaction dear. One, this is sale transaction, and another one, this one, there are two sale transaction. So you'll have to calculate 2 times profit or loss on sale. Now it says the market value of this share on 31st March 15 is 55 rupees. This is market value of the share on 31st March 2015. Question is, discuss the treatment of above transaction in the books of account. Apply weighted average method. So this question is slightly similar and slightly different also. This is a question which will test whether a student has genuinely studied this chapter or not. So this question is going to test your intelligence, okay, in full public view today. In front of the whole country, we are going to test your knowledge, skill and intelligence. Are you ready for this challenge? Say yes. If you are ready to handle this challenge, I am going to proceed. Madhuvanti Jaraman, please write down books of A Limited. Books of A Limited. Investment account for the period from 1/4/14. Write down in good handwriting with proper columns. This will give you full 8 marks. This question is for 6 to 8 marks. Okay. Now, Mr. Sunny, start writing. Security. Security is investment in shares. Investment in shares of AS Foundation Limited. AS Foundation Limited. Listed company. Your sir's company is listed company only in the question, not in reality. Face value is rupees 10, first line. We can assume face value is 10 rupees. Then draw the format. Kindly draw the format. Date particular face value number amount. Date particular face value number amount. Once your format is ready, please inform me. Then I will go to the working notes. Is the format ready? Is the format ready? Kirti is saying yes sir, format is ready. Sonam is also saying format is ready. Govind Thakur is ready. Shubham Gaurana is ready. Okay. So I am also ready for working notes. So we will write working note 1, or you can write step 1. There is no harm. Cost of opening investment. cost of opening investment. If you write properly, I will tell you, you won't require any other book a day before exam. Your notebook is good enough. So there are two lots in the opening balance. First is 5,000 shares into rupees 10, which is 50,000, and B 10,000 shares into rupees 60, which is 6 lakh. So point C total is 6 lakh 50,000. 6 lakh 50,000. And if I ask you what is the average cost per share, average cost per share will be 6 lakh 50,000 divided by total number of share opening balance 15,000. So my opening investment will be having an average cost of, let me also try 6 lakh 50,000 divided by 15,000. So we will write 43.3333. Yes, 43.33 is right. Most of you are right. I may require this when I will ask you. I may require this. Okay, so now write down working note 2. Working note 2. Average cost per share. Average cost per share when 10,000 shares were acquired on 10th September 2014. Average cost per share when 10,000 shares were acquired on 10th September 14. So this time I will give you a chance of your lifetime. Okay, this is a chance of your lifetime to answer this question and prove your intelligence. And prove your intelligence when the shares were purchased on 10 September 2014 at the rate of 70 rupees. What will be the average cost? What will be the average cost? What will be the average cost on 10 September 2014? This is a challenging question. Let the whole world see how intelligent you are. You are following weighted average cost method. In the question it is given, this company follows weighted average method. So kindly answer what is the average cost per share on 10 September when the company purchased 10,000 share at the rate of rupees 70. What happened to all of you? Why are you not replying? To help you, I will give you the formula. I will give you the formula weighted average rate equal to N1 R1 plus N2 R2 upon N1 plus N2. N1 plus N2. Students are saying 54. Let me check. Let me check. I can't guarantee whether 54 is right or not. This is what generally students are answering. I need to calculate. I need to calculate. Okay. Yes. So I am calculating now. What is the meaning of N1 here? Number of share held. Number of share held before the new purchases was made. So how many shares you are holding before the new purchases were made? You have 15,000 shares here, opening balance. But on 1st July 14, you can see the next line in your question, 5,000 shares sold. Oh, so it means before I made the purchase, I was holding only 10,000 shares. So 10,000 into 43.3333, this is opening, plus you have purchased 10,000 share now at 70 rupees, which you can see in the question, and then divide by 10,000 plus 10,000. So now whatever answer I will get, that would be final. So let me try 10,000 into 43.3333 plus 7 lakh divided by 20,000. So that comes to 56.666, let us say 7. So I can see now the students are giving this answer. Earlier they were giving 54. And those who have given 56.6667, they got some hint from me. This is the right answer. This is the right answer. Okay. This formula says whenever you have to calculate the average, first see how many shares you are holding before the new lot is purchased. So in this question, to trick you, they had given one sale transaction in between. In earlier problem, sale took place at the end when all the purchases were made. But this time, to trick you, one sale is given between opening balance and the next purchase, and therefore the students made mistake. So Kunal is admitting the mistake. Admitting the mistake is one of the greatest thing on earth. Many people don't admit. Now we'll go to next working note. Working note number 3. Profit or loss on sale of. Profit or loss on sale of 5,000 shares on 1st July 2014. Profit or loss on sale of 5,000 shares on 1st July 14. A. Sale value. Sale value is, if you look at the last paragraph, 5,000 shares were sold at 60 rupees. 5,000 into 60 is 3 lakh. Point B, cost. Cost. Cost is, see the opening balance. This stock was sold, 5,000 shares were sold before the new lot was purchased. You have to continuously pay attention, okay? Do not divert. If you pay attention, you'll understand. Keep all other activities switched off. Opening balance was 6,50,000. Opening quantity was 15,000. So my opening average cost is 43.33. Now out of this 15,000, 5,000 shares have been sold before the new lot was purchased. So the cost will be 5,000 into average cost at the time of sale. Average cost at the time of sale is 43.3333. So please give me the answer. For 5,000 into 43.3333. So that is almost 216,667. 216,667. Now I hope you understood. 21667. So therefore profit on the first sale, A minus B. So kindly reply, what is your profit when you sold the first lot? 83,333. Please be present every day. Please be present on time so that you will understand. Okay, this much service we can provide it to you. Okay, we are not your servant. We are working hard to make you pass. So you have to be present every day and on time and note down the homework given to you. Then this lecture will be useful to you. Right. Working note 4. One more question. Profit or loss on sale of another 5,000 shares. One more lot was sold on 1/1/15. Last three lines of the question. Last three lines of the question. Yes, Tiwari, please answer. I will not do anything. A, B, C. A is sale, B is cost, C is profit. Solve like working note 3. Give me the answer. What is the profit or loss on sale of 5,000 shares? Dear student, please try. Today after the lecture would be over, you will try all the remaining questions. So the answer is, come on, profit. 5,000 shares sold on 1/1/15 for 65 rupees, which is 3,25,000. Now these shares were sold on 1/1/2015, and before that sale you have purchased 10,000 shares on 10 September. So on the date of sale my average cost is 56.6667. On the date of sale, the average cost is 56.6667. So I will take this cost now here into 56.6667 because average cost has changed. So please multiply 5,000 into 56.6667. So that is approximately 2 lakh 83, make it 333. So profit will be A minus B. Profit will be how much? 41667. Let me see how many of you got it right. So Kunal, Govind, Sanket, Sonam, Sakshi, Rajendra Pawar, Shubham Gorana. These people got it right. Okay. One last working note will prepare. Working note 5. Valuation of closing investment. Valuation of closing investment. Valuation of closing investment. Jyoti is also right. Jayashri MV is right. Dhruv Tiwari Jadeja. Oh, Jadeja is back. Clap, clap, clap. Falak is right. So please tell me, let me see again today. Your intelligence is going to be tested now. What is the value of closing investment? What is the value of closing investment? Anybody? If you give this answer right, you'll get a reward. What is the value of closing investment? Give this answer and I will give you some reward. This is a challenging question. What is the value of closing investment? First 30 seconds I will ask you to try. Value of closing investment. Yes, please try. Calculate number of share at the end, multiply by cost, multiplied by whatever you want and give me the answer. Why are you not responding? One student is saying 8,50,000. Market price of this share is 55 rupees. Have you considered that? Okay. So I will solve in case if you want to write down. Now write down valuation of closing investment. I have got two answers, 8,50,000 and 8,25,000. Let us see which answer is right. So valuation of closing investment, I will write down cost is equal to number of shares held into average cost. Number of share held into average cost. Number of share held is 15,000. Have you got 15,000? Then some of you will ask how 15,000. So for such student, opening balance 5,000 and 10,000, 15. Plus 10,000 purchased, 25. Minus 5,000 shares sold on 1st July. Minus 5,000 shares sold on 1st January. So 25 purchased total, 10 sold. So we have 15,000. We have 15,000 share. So 15,000 into average cost 56.6667. So let me also try 15,000 into 56.6667. 8,50,000. Is it 8,50,000? 8,50,000. Are you getting 8,50,000? 8,50,000. This is cost. This is cost. Will you take cost or market value, whichever is lower, or will you just take cost? Or will you just take cost? Yes, Chetan Bansode, you are saying 8,25,000. Jyoti Jha is saying yes. Yes for what? Tanya is saying 8,25,000. Tiwari is saying 8,50,000. Oh my God. So the world is divided into two types of student. Half of the world is saying 8,50,000 and half of the world is saying 8,25,000. This is probably 15,000 into 55. Let me check. Yes, seems to be right. Which is the right answer? This is option A. This is option B. So the right answer is, the right answer is, Not B. The right answer is A. Now the student is wondering why we are not taking lower of the two. Because it is a long term investment. Because it is a long term investment. So remember those days when we started our discussion, long term investment will be valued at cost. So the answer is 8,50,000. Only write a note. Only write a note. Wait. All your serious doubts are actually not serious. So note, write down. In the given question, in the given question, in the given question, comma, first write this note and then I will look at your not so serious queries. Okay. Investments are long term investment. Investments are long term investments as they are held since many years. Since many years. As they are held since many years. Okay. Second point, write down. As per AS-13, long term investments are valued at cost unless there is a permanent decline. Unless there is a permanent decline in the value of investment. We are assuming that we are assuming that we are assuming that the decline is not permanent. We are assuming that decline is not permanent. Yes, Kunal, now you got the hint. It was written shares are locked in for 5 years. We are assuming that decline is not permanent. Why we are assuming decline is not permanent? Because in this question, the share prices are just fluctuating. Share price was 10 rupees, then it became 60, then it became 65 also, 70 also, and then at the end 55. So there are so many prices which is happening, and sometime it is rising, sometime it is falling. So if the share prices are rising and falling, then it is a temporary movement. It is just a fluctuation. Fluctuations for long-term investments are ignored and they are to be measured at cost. Now coming to question of one Falak Mehta, as I said, the question is not very serious question. This lady or gent, I don't know, the student is asking that it is written 5,000 shares are sold out of the shares acquired on 1911 at 60 rupees. It doesn't matter what is the source of the share. Source of share does not matter. Either we follow FIFO method or we follow average cost method. We don't do pick and choose. Is it right? This is not your departmental store. You will choose some item whichever you want to sell. There is a process given in AS-13, and that process says if you are a long-term investor, apply average cost. Average cost means every time you purchase, calculate the average cost, and that average cost will be applied to all the sales made and for valuation of closing investment. That is what we have done. This sentence is given to confuse you. Out of shares acquired. Like in previous question also, it was given to confuse you that out of bonus shares acquired, sales were made. But that time also we had ignored that line. Source does not matter. You have to follow weighted average rate method only. And what we have done is exactly as per the method and principles given in AS-13. So be happy. Kunal Pancharia is guiding Falak that it is average cost method. Thank you for enlightenment. So let us see whether our working notes are ready or not. This question had lots of ups and downs. So now I think our working notes are ready. One is opening investment, two is average cost on 10 September, 3, 4 are profit and loss on sale, and fifth is value of closing investment subject to this note that investments are long-term investment and decline is not permanent. Now it's a matter of just 1 minute to do the fill in the blanks part. If you will help me, I can do it very fast. So come on student, 1 4 14 to balance brought down in bracket working note 1. We have 15,000 shares, 1,50,000, 1,50,000, and the amount was 6,50,000. Amount was 6,50,000. Then I will go to next purchase. Next purchase was made on 1/9/14 to bank. Question in front of you. Fourth bullet point. 10,000 shares were purchased, which means face value is 1 lakh, and purchased at the rate of 70, so that is 7 lakh. 10,000 into 70. On 1st July 14, next line, on 1st July 14, 5,000 shares were sold. So I will write buy bank, sale. 5,000 shares sold at what rate? At the rate 60. So that is 3 lakh. That is 3 lakh. 5,000 into 60. And there is a profit also. There is a profit also on 1/7/14 to profit and loss account. Working note number, let me see working note number on the screen right side, working note 3, 83,333. 83,333. Working note 3, profit on sale. And the date is 1st July 14. There is one more sale. If you look at the last 3 line of the question, 1st January 15, buy bank, sale, working note 4, you have sold 5,000 shares, 50,000 is face value, sold for 65 rupees. So you will multiply 5,000 into 65, and on the debit side 1/1/15 to P&L account, profit on sale. Concentrate, attend every day, attend on time. Right. So now we have to go to working note number 4 to check the profit on this sale. You will find it below here, working note 4, 41667. 41667. And then on 31st March 15, there is no dividend in this problem. By balance carried down, working note 5. We have 15,000 shares whose face value is 1,50,000, and we have calculated the cost 8,50,000. Last working note, last line on the screen, 8,50,000. Can you see 8,50,000? Yes, 8,50,000. Now what I'll do, I will take the total of face value column, that is coming to 2,50,000, quantity column 25,000, and please tell me amount column total. All of you, please take your calculator. Amount column total, 6,50,000 plus 7 lakh plus 8,3333 and plus 4,1667. So that I am getting 14,75,000. You also try and check. Sonam ji, check. Total of amount column. Is it tallying? Credit side, check. 3 lakh plus 3,25,000 plus 8,50,000. Jai Shri has confirmed. Jai Shri MV has confirmed. 14,75,000. Yes, so this was one of the very important questions. Do not bother about the source of the share sold. Either you follow FIFO or weighted average method. Question has said weighted average method, so I will follow weighted average method. Okay, so I will follow weighted average method. So most of the students have done. Any query on this question? Please let me know if you have any query on this question. If you have no query, we'll go to the next question now. Do you have any query? No query. Okay. Have you written this note? Have you written this note? In this question, we are assuming investment is long term. Long term investment will be valued at cost unless there is a permanent decline. But we are assuming that there is no permanent decline. We are assuming that there is no permanent decline. Okay. Question number 18 now. Dear student, question number 18. Please read question number 18. So this question is similar to one question we have solved 17 number, but still we'll do one practice. So please, dear student, question number 18 now. Take a pen or a pencil, you have to do a lot of marking in the question. On 1st April 2010, Singh had 20,000 equity shares in X Limited. Singh had 20,000 shares in X Limited. Opening balance. Face value is 10 rupees, but book value is 16 rupees. But book value is 16 rupees. So that means opening balance will be 20,000 into 16, 3,20,000. On 1st June, Singh purchased 5,000 more shares at a premium of 4 rupees per share. So another lot was purchased at 14 rupees, 10 plus 4. Premium is 4. So how much is 5,000 into 14? How much is 5,000 into 14? And that is 70,000. So this I will call first lot. Let us say this is second lot. Opening lot, second lot. On 30th June 10, the directors of X announced a bonus and right issue. Bonus means free of cost. Right means you have to pay a price for it. Right means you have to pay a price for it. Bonus was declared at the rate of 1 equity share for every 5 held, and these shares were received on 2nd August. So number of bonus share 1 by 5 into opening balance plus 5,000. So please tell me how many number of bonus share will be received. Number of bonus share received. Come on. Number of bonus share received 1 by 5 into total number of shares held before bonus issue is 25,000 into 1 by 5. So 5,000 bonus shares will be received. So most of you are right. 5,000 bonus share. The terms of the right issuer, right share will be to be issued to existing shareholders on 10th August. Right issue would entitle the holder to subscribe to additional equity share in the company at the rate of 1 share for every 3 held. So 1 by 3, 20 we are already holding in beginning, plus 5,000 purchased and plus 5,000 bonus share. So can somebody tell me what is right entitlement? How many rights will be received? How many rights will be received? 1 by 3 into 20 plus 5 plus 5. So one student has given me the answer, Jadeja, 10,000 rights. One more Jadeja, Hardev Jadeja, Jadeja, 10,000. Sanket Jain, Sakshi, 10,000. Chinky, 10,000. Name of the student, Chinky. Okay, it's possible. And what is the price to be paid? 10,000. 15 rupees per share. The whole sum is payable by 30th September. So this is the date of making payment for right issue. Now let us see what Singh has done. Existing shareholder may exercise fully or in part and transfer their rights to outsiders. So you have been given choices. You can either use your right for yourself, you can even sell your rights to others. So what Singh did, exercise his option under the right issue for 50% of entitlement. So 50% into 10,000. 5,000 right shares purchased. And what about the balance? Balance rights sold to Anand. His friend is called Anand. His friend is called Anand. So from Anand to Anand he sold rights at 1.50. So sale proceeds of rights. Anybody wants to answer? Sale proceeds of right will be 5,000 into 1.50, and that is 7,500. That is 7,500. 7,500 is the sale proceed of right. Okay. So this question has all the ingredient for a 15 mark question. So this question will come in the exam anything between 10 to 15 marks. Next point, Dividend for the year ended 31st March 10. Oh, this is similar to an earlier problem. Dividend is for which year? 31st March 10. That means previous year. And what is our accounting year? Our accounting year is starting from 1st April 2010. So dividend is for previous year. Dividend is for previous year at 15% were declared by the company and received by Singh on 20th October. There are a few questions I am going to ask you and you have to participate. What is in this question? Dividend per share. What is dividend per share? Please answer my following queries. What is dividend per shares? Second question, how much dividend was received out of pre-acquisition profit? My third question is, how much dividend was received out of post-acquisition profit? Three questions you will answer in ascending order. Okay. Do not give me any explanation. Do not give me any explanation. Just write down three numbers. Dividend per share, dividend out of pre-acquisition profit, dividend out of post-acquisition profit. I want the answer in number. Okay. So first you don't give me any other answer. First answer I agree with most of you. You have said 1.50. Dividend will be paid at the rate of 15% of 10, 1.50. Okay. Now question is, what is the dividend received out of pre-acquisition profit? What is the dividend received out of pre-acquisition profit? Pre-acquisition, Kunal is saying 7500. Kunal is saying 7500. And dividend out of post-acquisition, student is saying 30,000. Okay. So most of you seems to have got it right. Dhruv Tiwari also. Falak Mehta, Pawar, you are right. Why 7,500? Let us see. Let us see. Go to the previous starting page. These shares which I have acquired on 1st June 10, these shares were purchased in this year. Singh was not a shareholder. Singh was not a shareholder on 31st March for the second lot. He will receive the dividend on this second lot because his name will appear in the register of member. But he was not a shareholder of the company as on 31st March. So therefore dividend received on 5,000 share purchased on 1st June 10 is a dividend out of pre-acquisition profit. So 5,000 into 1.50, 7500 is dividend out of pre-acquisition profit, and dividend received on the opening balance. Singh was already a shareholder on 31st of March. So therefore, on 20,000 share, dividend will be received at the rate of 1.50, 30,000, and this is post. This post will go to P&L account. 7500 will be credited to investment account. Tanya is right. Thakur is right. Okay. Dividend will not be received on bonus share and right share. Why? Bonus share and right share were issued by the company in the current financial year. Bonus share and right share were not in existence on 31st March. Most of the student has this query, why will Singh receive dividend on 5,000 share? The answer is dividend is paid to that member whose name appear in the register of member on the record date. So if Singh's name appears in the register of member on the record date, Singh will receive dividend, not the previous shareholder from whom Singh has acquired the shares. Next line. On 1st November, Singh sold 20,000 share at a premium of 3 rupees. So 20,000 into 13 rupees, 2,60,000. Market price of the share is given 13 rupees. So we will apply here cost or market value, whichever is lower. Cost or market value, whichever is lower, because in this question, it is not given any hint that these are long-term investment. So if no hint is given, apply the general formula. If no hint is given, apply the general formula. That is cost or market value, whichever is lower. Now the next issue is, what is the year ending date? Show the investment account as it would appear in Singh's book on 31st March 10 and value the shares held on that date. And value the shares held on that day. Whether we will follow FIFO or average cost is not mentioned in this problem. Whereas in previous question, the method was mentioned. Whether you need to follow FIFO or average cost, in this question it is not mentioned. So we will again follow average cost method, because this is the method that investors follow as per AS-13. This is the method investors follow as per AS-13. This question is similar to question number 17, but we will solve in the class only. Don't worry, we'll solve in the class. So in case if you if you have missed the previous question, you can do this one. We will solve by average cost method only, not FIFO method. Those who want to solve by FIFO method, please do it as homework. FIFO method, interested candidate will do as homework. We will solve by average cost method, because that is what institute have asked for this question. So please draw this format. Please draw this format. Name of this party is Singh. Books of Mr. Singh. Singh is king. Singh is king. Investment account. Investment account for the period from 1/4/10, that is the opening date given, and 31/12/10, that is the closing date given to us. We can't help it. These are the dates given to us, opening and closing. And the security is equity shares in X Limited. Quickly write down. Please write little fast. Equity shares in X Limited, face value 10 rupees. Face value 10 rupees. Okay. And today, after this, I will solve one more question, and then you will please revise this whole chapter. Please revise this whole chapter today. Okay. This will be in best interest of you. We have tried to bring almost all questions at one place, different varieties at one place, so that the student will have good practice. So is the format ready? Is the format ready? If the format is ready, I will need to prepare some working notes. Is the format ready? Please respond. Is the format ready? Keep 25 lines blank. Keep 25 lines blank. Okay. So most of the students have said that format is ready. One more format you draw. Profit and loss account extract. One more format draw. Profit and loss account extract. Today you give me one promise. Promise. We will revise all questions today itself. Say, we promise to revise all questions today itself. Okay? After this P&L account format, we will now write down some working notes. Working note 1 writes entitlements. Right hand side amount. First point A, number of shares held before right issue. Number of share held before right issue. So you have opening number of share 20,000 plus 5,000 share purchased on 1st June and plus 5,000 bonus share received. 5,000 bonus share received also. So we were holding 35,000 shares. No, sorry, 30,000. We were holding 30,000 shares. B, one student has promised to revise. Right issue ratio. What was right issue ratio? 1 is to 3. 1 is to 3. Number of rights received. 1 by 3 into 30,000. 1 by 3 into 30,000, 10,000. Only one student has promised to revise today. What about other candidates? Number of right shares purchased. Number of right shares purchased 50%. 5,000 shares. 5,000 shares. Point E, number of rights sold 50% into 10,000. Again 5,000. Two more lines. Point number F, amount paid for right shares. Continue below that. Amount paid for right shares. Amount paid for right share will be, you have purchased 5,000 share at 15 rupees. 5,000 into 15, 75,000. Okay. And you have sold rights also So point number G, sale proceeds of rights. Sale proceeds of rights. 5,000 rights sold to Anant for 1 rupee 50 paise. So that is 7,500. That is 7,500. 5,000 rights sold at 7,500. Note, sale proceeds of rights will be transferred to P&L account. Will be transferred to P&L account because sale proceeds of rights will be transferred to P&L account because shares were not acquired. Shares were not acquired on cum right basis. Because shares were not acquired on cum right basis. Because shares were not acquired on cum right basis. So this is about right. Now we'll make one small working note on dividend also. Okay. Up to this you have done. If you write a note, it will help you to understand. Presentation is very important. Understand. Only then you can get good marks. So now we'll write down working note 2. Dividend received. In the center, write down total dividend received. Dividend will be received on your opening shares 20,000 plus share purchase from the market on 1st June 5,000, and you will receive at the rate of 1.50. So which means the total dividend received, 2000 25,000 into 1.50 is 37,500. And there are two sources out of pre-acquisition profit, and out of post-acquisition profit, Out of pre-acquisition profit will be on 5,000 share into 1.50, that is 7500, and out of post-acquisition will be 20,000 into 1.50 is 30,000. The treatment of this will be bank account debit 7,500 to investment account 7,500. Okay, then here bank account debit 30,000 to P&L account 30,000. So this is the entry for dividend. When we'll prepare the answer, 7500 will write in amount column and 30,000 we will write in income column. Okay. Now we'll prepare one next working note, number 3. Working note 3 is average cost per share. Average cost per share first I need to calculate cost. First I need to calculate cost. First I need to calculate cost. Okay, what is the cost? Let us see one by one. There is an opening balance. Opening balance in the first line of the question, 20,000 into 16 is 3,20,000. Second, we purchased on 1st June 10. We purchased on 1st June 10 and we purchased 5,000 share at 14 rupees. So that is 70,000. Point number 3, we got bonus shares. We got bonus share. How many bonus share we received? 5,000. But the cost is 0. Bonus share cost is 0. Then point number 4, we also purchased right shares. If you go logically line by line, right share we have purchased, we have to go to working note 1. On the screen, point number F, 5,000 shares were purchased. You can write working note 1, 5,000 shares purchased at 15, 75,000. So this is all together cost. So any learned student will give me the total cost. Kindly give me the total of the cost. 3,20,000 plus 70,000 and 75,000 is 4,65,000. But there is one hidden adjustment. There is a dividend received out of pre-acquisition profit. This dividend out of pre-acquisition profit will be credited to investment account. That will reduce the cost. Less dividend out of pre-acquisition profit, 7500 in bracket working note 2. In bracket working note 2. Quickly answer now. Everybody quickly answer. What is my net cost? Please answer net cost, all of you. Please answer net cost, all of you. Net cost is how much? Net cost is how much? Let me also try. 4,65,000 minus 7500, 457,500. And now we'll count the number of shares. Point number B. Number of shares. Number of share is opening 20,000 plus 5,000 purchased plus 5,000 bonus share plus 5,000 right share. Come on, number of shares. Come on, number of shares. Total number of shares. All of you, fast. Total number of shares. Everybody should answer. All the student must answer. Number of shares held before sale. Number of share is 20 plus 5 plus 5. So are you getting 35,000? Are you getting 35,000? Yes or no? Come on, everybody must type number of share held. Point number C. Yes, come on everybody. What is average cost per share? Everybody should answer. Average cost per share. A upon B. A upon B. Everybody, average cost per share. Take 4,57,500 and divide by 35,000. So that is 13.0714. 13.0714. Very good. Amazing. All of you are genius. 13.0714. Nikhil is right. Falak right. Kunal right. Pawar right. Sakshi right. Okay. Now this working note will help me in the next two working notes. So working note 3 write down. 3 over I think. Working note 4 write down. Profit or loss on sale of investment. Profit or loss on sale of investment. So first she will write down A, sale value. Go to the question. Okay. In the question you have written point number F. On November 1st, 2010, 20,000 shares were sold at a premium of 13 rupees, at a premium of 3. So 3 rupees premium means 13 rupees the selling price. So can somebody multiply? Come on, everybody. Total sale proceed. Everybody, 20,000 into 13. Write down. 20,000 into 13. 2,60,000. Tang, tang. 2,60,000. Cost 20,000 shares into average cost. Please go to working note number 3, average cost 13.0714. Yes, come on, 13.0714 multiply. The one who will give me the answer first, I will give him award. 261, 428. 261, 428. Oh, there is a loss. Oh my God. There is a loss. There is a loss. A minus B is negative. 1428 loss. 1428 loss. One last working note 5. Value of closing investment. Value of closing investment A. First we'll write down number of shares held. Come on. Everybody reply number of shares held. Opening balance was 20,000. Purchase 5,000. Plus bonus share 5,000. Plus right share 5,000. Minus sold 20,000. Minus sold 20,000. So the number of shares held will be how many shares now? 15,000 shares. B. Cost. So cost I am going to take is 15,000 shares into 13.0714. Kindly multiply 15,000 into 13.0714. Everybody, come on. 196071. 196071. And market value. Market value, write down 15,000 shares into question. In the last line of the question they have given market price is 13. Oh my God. This time the market value is lower. This time market value is lower. This time market value is lower. Therefore, point number D, therefore value of closing investment will be lower of the two. And that answer will be 1,95,000. This time we will have a loss because of fall in the value. So that loss also we will transfer to P&L account. This is my market value. This is the cost. So there will be one more entry for loss in this. Two reasons for the losses. One, goods shares sold at a loss, 1428. And second loss is due to decline in the value, and you will find that my P&L account will have a total of these two losses. Is it right? So can we go to the main page now? So dear student, please come to the main page now. This question is a practice question because similar question we had solved earlier also. So 1,95,000 will be the value of closing stock. First, write down opening balance 1, 4, 10, 2 balance brought down. Okay, 2 balance brought down. Come on, 2 balance brought down. Louder. Numbers 20,000. Louder. Face value 2 lakh. And amount 3,20,000. 20,000 into 16. 20,000 into 16. Dang, dang, dang. So we are getting 3,20,000. Then we'll come to one purchase entry is there, 1,610. To bank. To bank. Dang, dang, dang. To bank we have 5,000 share purchased. All of you please smile a lot. This question requires a lot of smiling. Hey, hey, hey. Okay. So now what is the cost? 5,000 into 4, 14, 70,000. Sing is king, 5,000 into 14. So let us sing a song for sing and keep writing. Okay. So come to the next point is bonus share. Bonus share was issued. When was bonus share issued? Bonus share was issued on 2nd August. 2nd August 10, two bonus shares. Two bonus shares. Bonus share ratio is 1:5. 1 by 5 into 25,000. 5,000 bonus share. 50,000. Cost is nil. Cost is nil. Then we'll come to right issue. Right issue payment date is 30th September. 30th September 10 to bank. Right issue. For that I have to go to working note 1. So please go to working note 1. Okay. Working note 1. So what is the working note 1? We have 5,000 share purchase for 75,000 rupees. 5,000 shares, face value 50,000 and purchased for 75,000, but we have also sold one right. So come to the credit side now. Credit side you write down 30th September 10, buy bank, sale of right. Sale of right will go to income column, and that is also working note 1. Working note 1. Sale of right, working note 1. On the screen, working note 1, right hand side below. So you'll get 7,500. You'll get 7,500. 7,500. So now what is the next issue? Dividend. For dividend we have to go to working note number 2 on the screen. Working note number 2 is 7500 left side is out of pre and 30,000 is out of post. So what I'll do, I will write here dividend was received on which date, 20th October. Question is in front of you. Quickly write down by bank working note 2 dividend received, dividend received. So therefore in amount column 7500, that is out of pre-acquisition, and income column 30,000. Then there is a sale of investment on 1st November 10 by bank sale. Last two line of the question, 20,000 shares, face value 2 lakh, sold for premium of 3. So 2 lakh 60,000. 20,000 into 13. And on the same day 1/11/10 by P&L account, loss on sale. Write down loss on sale. So what is the loss on sale? Working note number. Come on. Working note number 4. 1428. Loss on sale 1428. Loss on sale 1428. And then we will write down in the last line 31/12/10 by balance carried down. By balance carried down, count the number of shares left, 15,000, 1,50,000, and the valuation is done in the last working note. So let us go to the last working note and check. Last working note, check what is the valuation. 1,95,000, lower of the two. 1,95,000, lower of the two. Quickly write down here 1,95,000. Working note 5. Now check the amount column. Amount column will not tally. So please give me the balancing figure in amount column. Amount column is not tallying because investment is not valued at cost. So there is a difference. Okay. There is a difference. So please write down how much is the difference in the amount column. How much is the difference in the amount column? That also we will transfer to P&L account. By P&L account. Balancing figure here. Anybody, P&L account balancing figure. First take debit side total. 3,20,000 plus 70,000 plus 75,000. That is 4,65,000. Minus 7,500 minus 2,60,000 minus 1,428 and minus 1,95,000. So 1,072 is the loss. This is also 4,65,000. And now you close the income column by writing on the debit side 31/12/10 to P&L account 37,500. This way, this investment account will close. Wait a minute. We have to also prepare P&L account. we have to also prepare P&L account. 1072 is right. Everybody give the right answer. Okay. Any query on the investment account? Any query on the investment account? Otherwise, we'll go to P&L account. So this is my P&L account. You will write on the credit side, by sale proceeds of rights. Sale proceed of right will go to P&L account. By dividend out of post acquisition profit, 30,000 post dividend will go to P&L account. Debit side to loss on sale, to loss on sale of investment. So loss on sale of investment figure was, let me check, 1428. 1428. And one more thing, to loss due to remeasurement. To loss due to remeasurement. Loss due to remeasurement means cost or fair value, whichever is lower. So in this example, fair value was lower. Because of that, we suffered a loss of 1072. So 1072. Chaurasia is right. Falak is right. Pawar is right. Okay, Kunal is right. Amazing. So this is the answer of this question. No need to take the total because this is only an extract of the P&L account. This is only an extract of the P&L account. Right? So from my side, this answer is over. Now what you do, write notes. Same as question number 17. Same as question number 17. Any query you can ask me now. Do you have a query? Please tell me. Related to this question. Okay, I will dictate one more question, which is from November 2021 RTP. November 2021 RTP, I will dictate one question, requesting you to please note down the question first and then we'll solve it together. So that will be the last question for the day. Okay? Right. Following transactions of Mita, took place during the financial year 2020-21. 2020-21. Draw this table 1/4/2020, 1/4/2020, purchased 4,500 8% bond, 8% bond of rupees 100 each, at rupees 80.50 come interest, at rupees 80.50 come interest. at rupees 80.50 come interest. Interest is payable on 1st November and 1st May. Then write down 1st May 2020. 1st May 2020 received half year interest on 8% bond. Received half year's interest on 8% bond. 10th July 2020, 10 July 2020 10 July 2020 purchased 6,000 shares of rupees 10 each. So what is the beauty of this question? It is a combo of debt plus equity investment. It's a combination of debt and equity investment. So on 10 July 2020, purchased 6,000 share of rupees 10 each in Kamal Limited for rupees 44 each through a broker who charge brokerage at 2%. 1st October 2020 sold 11,258% bond, at rupees 81x interest. On 1st November 2020, next line, 1st November 2020, received half year's interest on 8% bond. 15 January 2021, received 18% interim dividend on equity shares of Kamal Limited. 15th March 2021, Kamal Limited made a right issue of one equity share for every 4 share held at rupees 5 per share. Mita exercised the option for 40% of her entitlement. And sold the balance rights and sold the balance rights in the market at rupees 2.25 per share, and sold the balance rights in the market at rupees 2.25 per share. One more line write down. Prepare separate investment account. Separate means two investment account will prepare. Prepare separate investment account for 8% bond. For 8% bond, this is one account I'll prepare, and equity shares in Kamal Limited. Is it Kamal or Kamal? Is it Kamal or Kamal? Everywhere nowadays publicity. In the books of Mita Limited for the year ended on 31st March 2021. Assume that average cost method is followed. So what they are saying, assume that average cost method is followed. Assume that average cost method is followed. So thank you for writing this question. Now we will solve. In this question, let us first solve only the bond part. This is bond purchased. This is interest received on bond. Then this is bond sold. This is interest received on bond. And then you have to value the bond at average cost method. So currently whatever I have highlighted is going to deal with bonds only. There is one purchase and one sale. There is one purchase and one sale only. So there is no question of average cost. But still whatever is given, based on that we will solve. When there is only one purchase, that is the average cost also. Yes or no? So all of you please write down case 1. Case 1 write down. Case 1, investment in 8% bond. First, our concentration will be fully on bonds. So it is like they have given you two easy questions merged into one. Sometimes they give three questions merged into one. So you don't have to worry. You have to treat each investment separately. And if you will treat each investment separately, the question will look very, very easy. Of course, it is a little time consuming problem. So after that you draw this format. After writing investment in bond, write down books of who is the investor here, Mita. Books of Mita. Investment account for the period from, what is the period in this question? 1st April 2020 to year ending date is 31st March 2021, and the security is 8% bond. You will practice all questions today. You have promised me. Interest due date in this question is 1st May and 1st November. And then the face value is rupees 100 each. Face value is rupees 100 each. So please draw this format, and then I will complete this bond part. Won't take much time. So quickly draw this, 5 to 10 minutes more, and then this answer will be over and we will be done for the day. Is the format ready? Please let me know. Then I can go to working notes. Is the format ready? Please tell me format is ready. Write neatly. One day you have to read your answer also. Practice all questions. Okay. So students are ready with this format. You have to take a scale pencil. Now write down below that step 1, purchase and sale of investment. Purchase and sale of investment. Purchase and sale of investment. Yes, Pawar, Reddy, Wagmare, Pancharia, Gade, Agarwal. Oh, you are also Agarwal. I am also Agarwal. Draw the first working note. Draw the first working note. Any query related to this question? And if you have any doubt, you can mail me also. Okay, if you have any doubt, you will mail me at this email ID Vinod underscore CA at yahoo.com. You will write the name of chapter, page number, question number, and photo. Whose photo? Question's photo, not your photo. And answer which has been given to you. And you'll mention where is your exactly doubt. That will help me to solve your doubt easily. Okay. Without proper description, I will not be able to understand your query. So write your query in detail. So let us solve step 1. This is like a small revision of a bond problem. Purchase. Question is in front of you. 1st April, 1st April 2020. Sorry, not uh, 1st April 2020. I have to write here. Interest will accrue from, what are the interest payment date? Interest payment dates are 1st November and 1st May. So interest will start accruing from 1st November 2019 till the date of purchase 1st April 20. So number of months will be November, December, January, February, March. 5 months. 5 months. And you have 4,500 into 100. So the face value of these bonds is 4,50,000. Check whether X interest or cum interest. It is written cum interest. So in the last column, 4500 into 80.50. 4500 into 80.50 multiply. Please tell me 4500 into 80.50. 362250. Right? And then you calculate interest on 4,50,000 at 8% for 5 months. So that comes to 15,000. Interest is 15,000. Check interest is 15,000 and revise reverse working. You will get the X interest amount. Anybody for X interest amount? Anybody for X interest amount? Deduct 15,000. Deduct 15,000, 362250 minus 15,000, 347, 250. Right, 347, 250. And in this question, there is one sale transaction also, which is on 1st October 2020. 1st October 2020, interest payment dates are 1st November and 1st May, which means the interest will start accruing from 1st May 2020 to 1st October 2020. May, June, July, August, September, 5 months. And the face value is face value of the investment sold is 1125 into 100, 112500, 112500. Now check whether it is sold on cum interest basis or ex interest basis. So they are saying ex interest basis. So I will take 1125 into 81. 1125 into 81. It comes to, check my answer, 91125. 91125. Tell me the interest on this amount for 5 months at 8%. Interest on 1,12,500 into 8% into 5 divided by 12. Anybody for interest? Anybody for interest? Come on, interest. 1,12,500 into 8% into 5 by 12. 3750. So come interest amount will be 94875. 94875. Okay. Any query on this? Come to working note 2. Interest received on investment. Interest received on investment. Chaurasia, Tiwari, Wagmare, Pawar, Pancharia, all of you are right. So interest will be received on two due dates in this question. One is 1st May 2020 and second is 1st November 2020. May and November are the respective interest date. Number of months will be 6. Face value on 1/5/2020, we had this investment whose face value is 4,50,000. So you will take 4,50,000 into 8% into 6 by 12. 4,50,000 into 8% into 6 by 12. Just check, are you getting 18,000? And then out of 4,50,000, we have sold 112,500. We have sold 112. This amount was sold. 1,12,500 was sold. 1,12,500 is sold. This amount I have deducted here. So this balance left with me is 337,500. 337,500 into 8% into 6 by 12 into 6 by 12. So the interest received is 13,500. Interest received is 13,500. Interest received is 13,500. Check the answer on 111, 33, 750. 13,500 is right. Okay, one more small working note. Step number 3. Interest accrued on investment. So interest will accrue on 31st March 2021 and interest will accrue from 1st November to 31st March. 1st November 2020 to 31st March 2021. So it comes to 5 months. It comes to 5 months. And the amount will be the same, 337,500, because there is no further transaction after that. 337,500 into 8% into 5 by 12. Please write down. This is an important question. November 2021 RTP. Is it right? Interest on 337,500 is 11,250. Is 11,250. 11,250. Okay. Now write down step number 4. Step number 4. Profit on sale of investment. Profit or loss on sale of investment. Profit or loss on sale of investment. Right hand side rupees. First point number A, sale value. This figure you will get from step number 1. If I go to step number 1, the sale value is 91125. 91125. And how many units you have sold? 1125 units you have sold. 1125 units you have sold. Point B, cost. We have purchased only one lot. We have purchased only one lot. Which lot? The first lot which is mentioned here, 1/4/2020. For 347,250 we have purchased. For 347 250 x interest amount we have purchased. This you divide by quantity 4500. This will give you average cost, and multiplied by quantity sold. So this will give you proportionate cost. This will give you proportionate cost. So can you please guide me what is the proportionate cost here? Take 3,47,500, 347,250 divide by 4500. That will give you cost per unit into 1125. 86813 you can make it. 86813 approximately. Write down. Don't fight for 1 rupee or 2 rupees. So this is my profit. Take the difference. Take the difference. 91125 minus 86813. So we will be getting 4312. Yes, 4312. Profit on sale of investment is 4312. And then step number 5. Value of closing investment. Value of closing investment. So cost will be equal to, again same, 347,250 divide by 4,000 into bracket, out of 4,500, 1125 we have sold. 1125 we have sold. So this will give me cost of closing investment. Type 347,250 divided by 4500 and multiplied by this figure in bracket, net amount is 3375. Anybody for closing investment? So approximately 260437.49 you are getting. So 49 you can remove. You can just keep 260437. 260437. What about the market value? What about the market value? Market value is not given. Note, market value is not given. 1 rupee plus minus is okay. Write down approximate. You can write 438 also if you want. You are welcome. 260438 is also welcome. So now I have prepared all the working notes. We will prepare the main answer, which will take only 1 or 2 minutes now. Keep question in front of you. 1 for 2020 to bank. 1 for 2020 to bank. We have purchased 4,500 quantity whose face value is 4,50,000, and the amount will be X interest amount on the screen. Working note 1 347,250 and interest is 15,000. So you'll write here working note 1, and then we will receive interest on 1st May 2020. We will receive interest by bank. Interest received. Working note 2. In the interest column on the screen below, interest received is 18,000. Working note 2, 18,000. Working note will ensure that you don't miss anything. Then there is a sale transaction also on 1/10/2020 by bank sale. In the question you will see 1125 units sold, 112500 face value, and you write here working note 1 again. Working note 1 again to check the X interest value on the screen below. 91125 and interest is 3750. So 91125 and interest is 3750. Any query on this? Immediately on the debit side, 1/10/2020 to P&L account, profit on sale. Profit on sale. There was a working note for that. Working note 4, 4312. Working note 4 here. Working note 4. Then when we'll receive the interest on 1/11/2020 by bank, interest received. Go to working note number 2. Working note number 2 on the screen below. 13,500. 13,500. Then 31st March 21. Come on. By interest accrued. Working note 3. Working note 3 on the screen at the top. 11,250. 11,250. One last line. 31st March 21. By balance carried down. By balance carried down. So we have 3375 units left. 337500, 337500, and the amount is working note 5, closing investment value. Please come to closing investment value. On the screen below, can you see 260437? 260437. So this completes your answer. Just tell me whether all columns are tallying. This completes only bonds part. This comes to 351 562. 351 562. Yes, it is tallying. 351 562. And the interest you will transfer to P&L account on 31st March 21. Interest will be transferred to P&L account. Take credit side total. I will dictate, take on calculator, interest 18,000 plus 3750 plus 13,500 plus 11,250 minus 15,000. So that will give me interest to be transferred to P&L account. How much is interest transferred to P&L account? Credit side total minus debit side. 31,500. 31,500 balancing figure here, and total of this is 46,500. Total of this is 46,500. So this answer is partly over now. So this part is only bond. And I've seen in the exam they will ask you now one bond, one share, two shares. Solve each part separately and you will find it very easy problem. Okay. So one more thing we will do, then this answer will be over. Write down case 2. Case 2, investment in shares. Chaurasia is right. Sakshi is right. Sanket is right. Lucky Agarwal is right. Case 2, write down investment in shares. Investment in shares. Then draw this format. Draw this format. 5 minutes more. Books of Mita Limited or books of Mita. Investment account for the period from 1/4/2020 to 31st March 2021. This time the securities equity shares of Kamal Limited, and the face value of the equity share is 10 rupees. Face value is 10 rupees. Draw the format. Once it is done, please tell me. Once the format is ready, tell me. There is only one purchase and only one sale. Is the format ready? Is the format ready? So in the exam they can ask separately only equity share part. Separately they can ask only the investment in debenture part, or they can add it in one problem only, combo offer. So everybody is ready. I will go to now working notes. Your patience is highly appreciated. You are a good student, and I can see the determination in you to pass the exam with flying colors. So, you will definitely get it. Your dreams will come true if you continue with the same enthusiasm and dedication. So, step number one, we will write cost of investment. Question should be in front of you. Answer should be written in detail. This is a professional exam. First A, basic purchase price. So basic purchase price is, if I look at this question, in the third line, 6,000 shares were purchased at 44 rupees. 6,000 into 44. How much is that? 6,000 into 44. 6,000 into 44. 2,64,000. Very good. 2,64,000. But there is a brokerage also. Question should be in front of you. On 10 July, brokerage is 2%. Brokerage will be added to the cost of investment. Add brokerage at 2%. So that will come to 5280. 5280. So my total cost A plus B is equal to 269,280. Yes, Kunal Pawar is right. Step 2, dividend. This time there is only one dividend. Please come to your question. 15th January 2021. It is written on 15 January 2021. Dividend received 18% interim dividend on equity share of Kamal Limited. So dividend will be received on face value. Face value of shares. Face value of share is 6,000 into 10 rupees. Dividend is calculated on face value. And point number B, dividend at the rate of, what is the rate of dividend? 18%. So that is 10,800. Note, it is mentioned that it is interim dividend. We will assume that we will assume that it is dividend out of post acquisition profit. We will assume that it is dividend out of post acquisition profit, because the share was purchased in this year and you have received interim dividend. Interim dividend is paid out of current year's profit. Interim dividend is paid out of current year profit. So this is treated as post acquisition. And if it is treated as post acquisition, it will be transferred to P&L account. It will be transferred to P&L account. Now write down step number 3. Right entitlements. Right entitlements. Write down amount. There is one right issue also. There is one right issue also. So this question they have mixed right issue. Point A, number of shares held prior to right issue. Number of shares held prior to right issue 6,000. Write neatly. Okay, your notebook is a sign of your personality. If you write neatly, people will ask for your notebook. Then you write down right issue ratio. Right issue ratio. What is right issue ratio? Paragraph last, 15th March. One share for every four equity share held. 1 is to 4. Point C. Number of rights received. So that will be 1500. 1 by 4 into 6,000. Number of right shares purchased. Number of right shares purchased. So the last paragraph says Meeta exercised the option for 40% of her entitlement. 40% of 1500. Yes, 40% of 1500 is how much? 600. And what about the remaining? Remaining were sold at 2.25. Number of rights sold 900. C minus D. 1500 minus 600. Lakshana Ramesh is right. Sakshi is right. Point number F, write down. Amount paid for right shares. Amount paid for right shares. You have purchased 600 shares. If you purchase right share, you have to pay 5 rupees per share. You have to pay 5 rupees per share. That comes to 3,000. And sale proceeds of rights. Sale proceeds of rights. If you sell rights, you will receive 2.25. You will receive 2.25. Tell me, 900 rights sold into 2.25. How much is that? This is 2025. This is 2025. Is this right? 2025. Now, in this question, there is one surprise thing. There is no sale of share. There is no sale of shares. Oh, so if there is no sale of share, your closing investment will be just the total of original holding plus right share purchased. Original holding plus right share purchase, no complicated calculation involved. No complicated calculation involved because there is no sale. So whatever you have purchased remains in your stock. So one last small working note. Step number 3. Below step number 3, write down note. As per AS-13, sale proceeds of right will be transferred to P&L account. Sale proceeds of right will be transferred to P&L account. So now we can solve this question. One more working note. 4 write down, or step 4 write down. value of closing investment. Right hand side rupees. Just add two investment that we have purchased. Cost of shares purchased on 10th July 2020. Cost of share purchased on 10 July 2020. This figure 269 280 step 1. 269 280 bracket step 1. And B, add right shares purchased. This is step 3. Right share purchased on the screen right side 3000 rupees. Point number F. 3000 rupees was paid for right shares. Therefore, value of closing investment. Therefore, value of closing investment A plus B, that is 272 280. 272 280. Note, market value is not given. Market value is not given, hence ignored. Hence ignored. Market value is not given, hence ignored. Market value is not given, hence ignored. Any query up to this point? Any query up to this point? No query? So now we'll just complete the answer. Keep the question in front of you. 10th July 2020, to bank purchase. Working note 1. How many numbers you have purchased? 6000. And the amount is, let me check, 269 280. 269 280. Then 15th March 21. Last point in the table, right share purchased. To bank, right shares purchased. How many right shares were purchased? 600 right shares at 3000 rupees. And then we have sold rights. By bank, sale proceeds of rights. Working note 3. And that was 2025. But before that, there is a dividend also, which is before March, 15 January 21. Rajendra Pawar said no query. 15 January, by bank, dividend received in the income column. In the income column, there is a working note 2 on the screen left side, 10,800. 10,800. Can you see that? 10,800. Working note 2. There is no sale in this problem. Interesting question, no sale. 31st March 21. By balance carried down. So number will be 6,600. And amount will be just the total of the two, 270 to 280. Even if you don't prepare closing stock working note, in this question it will tally because there is no sale. And then this income I will transfer to P&L account 31st March 21 to P&L account. Total income on shares 10,800 add plus 2025. 10,800 plus 2025, that comes to 12,825. Now take the total of all these columns. Check whether they are tallying. Check whether they are tallying. Yes, 12,825 is right. This answer is over. Okay. This answer is over. So enjoy your day. All the best. See you tomorrow.